Welcome in, everyone. Welcome to tonight's live. Today is mic check 1 2 1 2 1 2. Water. Welcome everyone to tonight's live. Today is April 21st, Sunday night. We are now live 8 p.m. Eastern Standard Time, aka New York session time. So we're going to go over a few things first, right? We're going to go over a couple of different news on Forex Factory. So we're going to be looking at the calendar right now. We're starting off for the week, Sunday. We usually just check out the news for the week. If you're a new trader, I always encourage the new traders not to trade the red folder news, as these are more risky, volatile moves. Wait for the move to play out about 30 minutes to an hour after the news is released, and then try to find a nice entry point for that. We're going to start off with today, Sunday. Sunday, we see no red folder news, but we do not trade the Asian session usually because we mostly focus on the New York session open, and then the silver bullet hour within the New York session, which should be about 3 of them. So tonight, Sunday, we have no red folder news. Monday, I see no red folder news at all. On Tuesday, on New York session time, Eastern Standard Time, we have in London session, Euro, red folder news, GBP, red folder news. Then inside the New York session, we have USD, red folder news. And then in the Asian session, we have AUD, the Aussie, red folder news. Wednesday, we have no red folder news whatsoever. Thursday, we have USD red folder news 2 times. Once right before market open, and then one right after the market open. We have a tentative JPY, Japanese yen, in the evening for Asian session, red folder news. And then Friday, we have red folder news that's tentative for JPY again. And then also USD. An hour before New York Open, red folder news USD. And then half an hour after New York Open, red folder 10 a.m. USD as well. Let's jump on the charts. So pulling up the charts right now. We're going to look at it from a perspective in a weekly session. On a weekly time frame. You're looking at my charts right now. They're M and NQ. I also have another chart that I have already opened that's marked out that we've been working on for the past few weeks together. I have it under my futures chart. I have it under NQ1. Right? You're going to see this one's marked out with pretty much everything. And right now we're playing out inside a daily fair value gap 50% mark. Which if it plays out correctly, no, actually, since the candle closed and broke through it, that area has been mitigated. So we're probably looking at that area right now for a bearish entry, since we are bearish right now on the daily. Weekly looks like it's about to flip. It just needs to break down through this structure over here on my left. And then we're confirmed bearish for the rest, which kind of makes sense as well because we're now on the second quarter of the year, Q2, and Q1 was extremely bullish. So we should be seeing some kind of pullback now. It just makes sense, right? That we go into a nice like bearish pullback, and then we'll probably see some more all-time highs sometime in Q3, right? But we'll see because the market's been extremely volatile lately. We started off bullish as hell, and now we're going into like a nice bearish pullback, which is really nice. It's kind of nice shorting, but at the same time, it doesn't feel good, right? Even though you're shorting and you're making moves and you're winning positions, and yeah, you're coming out profitable, a short just doesn't feel right. I know Jay said it as well the other day during his live on the Easy Trades Discord, where it's like, yeah, if you're longing something and then everything's bullish, everyone's winning, everyone's happy because everyone's making money. But at the same time, if you're shorting positions and you're still making money, it doesn't feel as satisfying because, you know, some people are losing money, people are losing, you know, their spot positions, they're losing value. So it doesn't feel as good as when the market's extremely bullish and everyone's just winning, right? Without hardly trying. which is great. But at the end of the day, this is the great thing about futures and Forex, right? We focus on getting the right position at the right time, and you can make money in a rangy market, you can make money in a bearish market, and you can make money in a bullish market. That's the beautiful thing behind futures and Forex. I was kind of getting tired of waiting for crypto to come back. We're talking about like 3 years ago. And I started looking into, what I can do so I can always make some kind of profit. And 2 years ago is when I started day trading. Well, learning how to day trade. I haven't really started day trading seriously until about a year ago because I didn't know what the hell I was doing. So yeah, we're going to be making money, hopefully all of us together, by just, paying attention to the markets and trading those points of interest. So right now we're looking at this chart, looking at the weekly, huge bearish engulfing candle on the weekly. Look at that massive bearish engulfing candle, right? Go down to daily. Daily is bearish as well. Let's go down to 4 hour. 4 hour is bearish as well, with a bunch of fair value gaps that are left over, right? You have a ton of different points of entry over here. So we have one entry over here. This is a 4 hour fair value gap. It's actually pretty big fair value gap over here. So we're going to highlight this one. On the daily, do we have anything that was left over? Yeah, we do have some stuff left over here on the daily. Daily, we're going to identify two different fair value gaps over here. It is a little bit messy. Bear with me. We were working these out over here. All right, so here's a fair value gap and here's a fair value gap. This one's really small, so I'm not really going to consider it. I want to consider these two over here. This one because it's at an extreme premium if it pulls back, and then this one over here because it's the closest fair value gap that we have. So I'm going to mark both of these out. Have this one over here. We're going to color it red too because we're looking for bearish positions. Then we have this one down here. All right. Let's put a nice little lock on these. I'm going to transfer these over to my MNQ charts after this as well. We're going to remove the easy oscillator from the bottom so we have a little bit more space. Right now we're playing out in an amazing zone here, right? So remember you guys, like we put this on the charts a couple weeks ago actually. All right? Quite some time ago. Now it's actually playing out in here. So we were looking for price action to reject off this level here, 17,137.50, and then a nice little continuation up before coming back down to seek the daily fair value gap 50% mark. So this first daily fair value gap over here, we're looking at $18,055.75. That's going to be our first alert. And then we're going to set an alert on this one as well. This one's at 17,584.75. Kind of weird that I couldn't select this. Right, we're going to label it. These are daily fair value gaps, 50% marks. This is a daily fair value gap, 50% mark as well. Let's go down into 4 hour. 4 hour, this one overlaps with the daily, so we're going to label it as such. I'm going to remove this chart over here. Once it broke out of that, we were no longer ranging. Now we have a clear bias, clear direction. We're looking into a bearish position now. So this one, let's label you as such. Daily 4 hour. And then this one, there's nothing right here on the 4 hour. We have something over here on the 4 hour. You can mark that one out too. For our fair value gap 50% mark, we have a small little fair value gap over here as well. So as of now, we are playing out. We broke through this daily fair value gap over here. So this is no longer good. This has been mitigated. We have something over here as well. This is a daily fair value gap. We're going to see how price action plays out. I'm seeing price action come and test out this daily fair value gap over here. Yeah, it's going to be right over here, actually. Not exactly sure why it's that high, but the daily fair value gap is right over here. And then that's already been tapped into and mitigated. So what happened was that this fair value gap over here was an inverted fair value gap. So instead of this holding the price action down, it actually broke through and became another level of support. Instead of becoming a resistance level and going straight down, it became a level of support, and then price action retested on top of it and then continued upwards, which is great to see, because if you're paying attention to the charts and you're paying attention to the fair value gaps, if it doesn't reject it and continues in the direction that you were aiming for, it becomes a resistance / support, which is always cool to see when you see these inverted fair value gaps. Instead of this price action holding it down and then continuation down, it broke through it and then started wicking off it and then bounced off that 50% mark, continuation upwards. That would have been a nasty move if you were able to catch that. Just make sure to, keep an eye on those inverted fair value gaps. So this daily fair value gap, we're going to move it down here. These two overlap. So because they're so close together, I'm just going to remove the 4-hour fair value gap. The daily one now becomes my 4-hour fair value gap and daily combined. Give me 1 second. Trying to label it, but it doesn't give me an option to. But yeah, the daily fair value gap, 50% mark, that's what we're looking for right there. This, we can remove that. That's been mitigated. So we're definitely expecting price action to come and retest this area here, which is your 16,870 area. So what does this mean? It means that we are pretty much bearish for the week, or the starting of the week. We should see some kind of retracement appear into one of these fair value gaps with a continuation targeting over here the daily fair value gap 50% mark. Now that we have this bias, we're going to start looking for those entry models inside these points of interest on these lower time frames. So as long as we keep our bias bearish and we're looking for price action to reverse at one of these points of interest, we should be able to get in a really nice trade with a really large ROI. For example, if I were to short over here at the 50% mark, with my stop loss being at the first candle of the fair value gap, right? So the fair value gap is the second candle. This prior candle is the first. If I were to put my stop loss right above there and I'm targeting this daily fair value gap, this is on a daily time frame, by the way. We're looking at a 2.55 RR. Now, if you're able to snipe that on a lower time frame, like let's say an hour, 4 hour, 15 minute, if you're able to get a good market structure, then you can get a nice tight stop loss over here. You can probably get way more than a 2.55 RR, right? But we're not going to go over how much you can make, this and that. We're just looking into proper points of entry for our trades. So those 3 different points of interest over there, we identified on the daily, 17,584.75. Then also this daily and 4-hour overlap, 18,055.75. And then we also have this little 4-hour fair value gap over here, which will set an alert for this one as well, because we want to catch that. 17,837. Set an alert on that. And let's be patient this week, because I was extremely impatient last week and I was trying to pass all my funded futures accounts, my futures eval accounts in one move in one day. And yeah, I got kind of cocky with it. I am funded right now on futures with one account. So I was trying to pass the other ones the same way. Well, not the same way. I was being very aggressive. Whereas where I passed the funded account, I was being very conservative with my trades, and I was actually following my risk management, which is 1% per trade. Whereas the other few accounts that I purchased after I got funded, I was trying to pass them all in one trade in one day, because there's a promotion right now going on with Apex where you can pass your accounts in one day and get funded the next. Don't let that get to you. Follow your strategy. Stick to your risk management. Don't YOLO into positions. That's how most of us end up losing. So it looks pretty good. Charts look pretty good. Price action's nice. So yeah, we're going to wait for price action to play out in these areas. And now we're going to move on to gold. I'm going to switch back to my Forex charts. I love gold. Gold. So gold, make sure you have this marked up. You have a fair value gap 50% mark on gold, 2269.15. We can probably round it up to a solid number. We're going to go to 2270. Nice solid number right there. All-time high remains the same, 2431.10, 0.9. We can round that up as well, just in case. And yeah, that's the closest fair value gap that we have on the weekly to our price action at the moment. That's what we're going to focus on. We have a couple other ones down here, which we'll get to when we get to them. But for now, that's what we're looking at. Daily price action, what do we see? We see a small daily and another daily right beneath the weekly fair value gap. One inside and one just under. So we're just going to consider the weekly fair value gap. That's what we're going based on. Nothing else has been formed. Price action is very, very bullish. It's just literally just range, not ranging, but it's literally like sitting on top of each other candle body. It's pretty cool to see price action like that. It's very, very bullish. So go down to 4 hour. 4 hour is ranging slightly. You have a market structure shift over here, which if you have easy algo V12 and also easy algo SMC, right? What I'm using right now is SMC to see the market structure shift. You'll see it right there. You have a market structure shift. You have a market structure shift over here, and you have this fair value gap that was left over, or imbalance, as you like to call it. You can call it imbalance. You can call it a fair value gap, but that one's been tapped into. It actually tapped into it 3 times, and it continued upwards, which is pretty cool. Everything else has been tapped into and mitigated recently. So yeah, I mean, we don't really have anything developing at the moment. Clear indication is the weekly fair value gap, so price action might just seek it and then go up. We are in a time of war now with the whole conflict that's happening right now with Israel and Iran. So that usually drives gold up. Same thing happened with Ukraine. Ukraine drove gold up, and then Israel on October 7th, when they had that horrible incident happen to them, that terrorist attack, the gold started rocketing up pretty much. So times of war create gold bull runs, which is good for gold, but the reason it's there is because there's bad times happening, right? So since we now have more conflict going on between Israel and Iran, we should be expecting gold, in theory, to continue going up, building more value. But it's kind of ranging right now, so it's no clear indication, but just based on that, we should be bullish. But we're going to keep a closer eye on this. We have an order block over here where it should tap into and then continuation to break the all-time highs. But we'll keep observing gold as it moves on throughout the week. As of now, I don't have a clear indication on gold. Just speculation at the moment. And my weekly is bullish. My daily is bullish. My 4 hours, I would say bullish. Yeah. Because market structure, lower lows, right? Higher low. These are equal lows. And then a higher low, higher high. Right? So pull back here and then starting to climb up. Higher highs, higher lows, equal lows in a higher position. So I am kind of bullish, but I'm waiting for more confirmation. Let's move on to, let's check out US 30, right? I haven't checked out US 30 in a while. And it's been a while. We have this weekly fair value gap up here. That's at 39,174.75.73, excuse me. We have another weekly fair value gap. This one's left over after this market structure shift. So this one holds a lot of weight. This one's at an extreme premium zone. So if we're shorting, we should be shorting at an extreme premium. This is just under the 50% mark. So it wouldn't hold as much weight as this one over here. But we're still going to mark this one because this could play out to be a very important point of interest for us as well. I'm going to mark that out. And label this as well. Weekly fair value gap, 50%. All right. Sitting just above this weekly 4-hour fair value gap. All right. Bullish mark. And you can see, look. Did it close beneath it? Yeah, it kind of did actually. But it got rejected nasty off over here. So this wick broke through these two different daily ones. And it also, the fair value gap here on the weekly, it closed beneath it. So that means it's been mitigated. Or did it? No. It's just above the fair value gap, which is crazy, right? So this is still valid. So that's why price action came all the way up here, because it got rejected off this weekly 4-hour fair value gap. And it didn't close. The candle body did not close beneath the fair value gap. Candle body closed inside the fair value gap, meaning that this was going to reject. Wow. If you would have caught that, we labeled this out a few weeks back as well for this price action. So we're looking for price action to come and retest in these fair value gaps over here. If we draw our OTE fibs, right, the Fibonacci's, let's see our extreme premium and discount zones. So I have my golden pockets that's just right underneath this. We have 0.705. That's directly inside this fair value gap. And now if you wanted to see the 50% mark as well, we can do that too. So everything below the 50% mark is a discount. Everything above the 50% mark is a premium. Whenever you're trying to short, you want to be in a premium. And whenever you're trying to long, you want to be inside the discount. Right? So right now, these three entries are inside my extreme premium. And then it overlaps with this weekly fair value gap. That's where I would look for an entry. And then the 0.62 is just underneath it. So I would probably DCA. I'm looking at the 0.705 and the 0.79. That's what I'm looking at for entries for continuation to the downside. It's pretty nuts. Check you out on the daily. Daily overlaps over here for our daily. Nothing over here for the daily inside the weekly. Nothing here in daily inside this weekly either. Pretty crazy how it's sitting right above that on the daily. And we labeled these weeks ago too. Daily 4-hour fair value gap 50% mark. You could have entered there too. This nasty wick could have wicked you out, but you could have entered over here as well. Pretty nasty wicks. 4-hour. We have a couple 4 hours, but since we have the dailies pretty much near the 4 hours, we're going to go based off the dailies and the weeklies, especially for US 30 because it's moving pretty well. It's really good. Wow. Look at that. All these levels that we had marked out, which you can view the YouTube videos, go back a couple weeks, even a couple months to like January, you'll see that we marked these levels out and price actions rejecting off it completely perfectly fine. Now this level here, instead of becoming if daily fair value gap that's bullish, it broke through it. Now it's becoming an area of support with this new fair value gap that's been formed over here on the right side. This is on 4-hour. So we're looking for price action to go up. This is a market structure shift over here. So on the 4-hour, we could be looking into entries over here because we want price action to go up. And the fact that it tapped into these fair value gaps over here and didn't close below them means that we're still good. So these are bullish, guys. So on the lower time frames, we are bullish and we're trying to seek those different fair value gaps up there. These are the entry points that we definitely want to look into. Remember, lower than 50% because we're going long. So if you go like that, here's my 50% mark over here. And then we have our optimal trade entries, these three different trade entries. So my 0.62, which is the golden pocket, and my 0.705, both overlap this 4-hour fair value gap over here. So that's where I would do my entry. This is just above it, but it could reject off that as well. So we're going to have both of these labeled. This I can remove because it's been mitigated. And then this I'll maintain because it looks pretty good. Just so I can see the market structure a little bit better. Setting my alerts over here. 37740.95. And then over here, this looks really, really good as an entry. $37546.85. That's beautiful. I would definitely look into this. Stop loss below here with my take profit targeting fair value gap and then this other fair value gap. Take profit 1, take profit 2. That's what I would do. And then that'd be a pretty nice risk to reward right here. So something like this. Oops. So 2.77 for take profit 1, 2.7, and then take profit 2 is like a 4.81, 4.82. But yeah, that's the potential move that's building up at the moment. So we'll keep an eye on it. We label those points of interest. We identified the weekly point of interest, fair value gap. We've identified a daily point of interest, and we've identified some 4-hour points of interest as well. We are bullish on the lower time frames, intraday time frames. But overall, the trend is bearish. Jumping into Euro USD. Reason is yellow is because we were, and we still kind of are, in a ranging market on the weekly. Yeah. Same thing, still ranging. Weekly time frame, what do we see? See this weekly fair value gap over here, which looks pretty cool, honestly. It looks like it's actually really solid. Lower structures as well, lower highs. And let's draw the fibs. That overlaps almost perfectly with the 0.705. We're going to keep that active, right? This fair value gap is at, where are you at? Let's send this stuff back. $1.08060. 1.08060. Set your alerts on that. Looks like my alert is active, but I can't click it for some reason. There we go. That's the closest fair value gap that we have on the daily, closest to our price action. That one looks really good because it's over. It's also in our premium zone, which is where you want to be whenever you're shorting. What does the 4-hour look like? 4-hour, they both overlap. 4-hour and the daily overlap together. Inside the same zone, 1.08060. Small little fair value gap over here on the 4-hour, but it looks like it might have been tapped to and mitigated. So for now, we're just going to wait for price action to get up there. And we're looking for a bearish entry and shorting this to, well, it looks like we already tapped into our daily 4-hour fair value gap 50% mark. That was a bullish one too. Yeah, we tapped into that. Tapped into here. Right there on 1.05980. And then that should continue up into that fair value gap. And then seek this sell side liquidity here, which is also this demand zone. So these two it's going to seek first. And then seek out this weekly fair value gap. Probably just boom, boom, boom. Ping pong its way down while breaking market structure. And then once we have a nice clear candle closure beneath this zone here, we are no longer going to be in a ranging market. We will now be in a completely confirmed bearish market for Euro USD. On the weekly time frame too. Cool. So that's looking at Euro USD. Let's jump into GBP USD. Check you out on the weekly, my boy. My G. What do you look like? Market structure shift to the upside. That's bullish, but then it broke through here. Now we're bearish. Market structure shift. Sitting inside this order block, excuse me. Right now, it did break through this weekly 4-hour fair value gap. Candle closure. You see beneath it? No, that's already been tapped into and mitigated. That was a tiny fair value gap right there. Right? So this tiny little fair value gap, it broke right through it. Closed beneath it. This has been mitigated. This is no longer good. But it could also play out. I keep those active only because it'll probably play out as an inverted fair value gap. So price action will tap back into it and then reject back down. What else do we see here? Daily 4-hour fair value gap. I have a daily fair value gap over here. This one's at 1.26097. This is bearish. We're looking at bearish market structures, right? Trend line is going down. High structure highs, right? Lower highs, lower lows. They're going down. Daily 4-hour, 1-hour fair value gap over here. We should be seeing this play out. It should tap into that. That's the closest fair value gap that we have. Then we also have another 2 daily fair value gaps that I'm going to highlight as well, because we should be definitely watching those now that price action is so close to here. So in a perfect world, price action will tap into here, reject off it, seek this fair value gap, and then seek the next fair value gap, which these two are very close. So it'll probably tap into both of those right after. All right, creating these fair value gaps on the daily as well. This one's at 1.22483, and then this one is at 1.21735. Set your alerts on that. Let's check you out on the 4-hour. 4-hour is the same. This fair value gap, the 4-hour is inside the daily. So we're going to play it out as such. And then this one already has it marked up. It's a daily 4-hour and 1-hour fair value gap. So closest to our price action is this fair value gap, which it should break through. And then this one over here, which is what we're looking for a point of entry. All right, moving on to AUD USD. What do you look like on the weekly? Weekly looks like we're losing momentum. We are bearish on the weekly. If you look at the market structures, lower highs, lower lows, continuation of lower highs on the weekly market structure. So we are bearish on the weekly. What does the daily look like? Daily, we tapped into this daily 4-hour fair value gap 50% mark, and the candles closed beneath it. This has been mitigated. Now this could actually become an inverted fair value gap. So this should, in theory, dump. So the fact that it broke through that, we're looking at bearish positions. Gonna save that. Price action should tap into this daily fair value gap over here, 0.65758. We're looking for bearish entries. So this is at an extreme premium zone. Whenever we're in a premium, we want to be looking at shorts, right? So shorts inside premium zones, longs inside discount zones. So that is an extreme discount, excuse me, and it is extreme premium zone. So that's what we're looking for, a short. So we're looking for price action to tap into there somehow. Over here, these fair value gaps, we're going to ignore because they're too close to the price action. That's what the daily looks like. This could actually dump and break right through this demand zone. What does 4 hour look like? 4 hours the same. The 4 hour and the daily overlap together, so we're going to consider that the same. And then we also have a couple smaller fair value gaps over here on the 4 hour, which we're not going to count because they're way too close to the price action, right? We want to be looking at premium entries for any shorts that we're trying to do. So for now, we're still just waiting for this price action to come over here, 0.65758. That's what we're looking for. All right. That's pretty much it for Aussie USD. We went over the weekly, daily, and the 4 hour. We went over a couple pairs this evening. We went over NASDAQ, US 30, gold, Euro USD, GBP, and also the Aussie dollar. So guys, without further ado, thank you so much for joining me this evening. That's pretty much our outlook and bias for the week. We're looking for those points of interest. Make sure to set your alerts on those points of interest. Do not force your trades. Wait until your alerts go off. Price action is inside those points of interest. And then that's where we are going to be focusing in on entries. Now, if you need 8 different entry models, I'm also posting the 8 different entry models inside the Discord for you guys to look into. Those entry models are going to be based on the 5 and 15 minute time frame, but only when you get to those points of interest. Now, thank you so much, everybody, for joining me this evening. I'll see you same time, same place next week. Have a beautiful and wonderful, profitable trading week.